cease and desist note, the walls of Marlborough House didn't just echo that morning. They thundered, with a warning shot heard from London to Washington. On February 11, 2026, Prince William stepped forward and did something the monarchy almost never does. He drew a public line in the sand. And it wasn't subtle. It wasn't vague. It was a full-force declaration that the crown would not, under any circumstances, be dragged into the storm now swirling around Arkwell and its expanding web of commercial ventures. London, 10 a.m. cameras locked in, global press watching. And William, composed but unmistakably resolute, delivered words that cut straight through the speculation. He made it crystal clear, the British royal family does not endorse, finance, support, or associate itself with the Archewell Foundation or its subsidiaries. Silence, he warned, must never be mistaken for consent. The Crown, he insisted, exists to protect constitutional integrity, not to shield private ventures from regulatory scrutiny. This was no routine palace clarification. It was a constitutional intervention. Behind the scenes, the pressure had already been building. On February 9, 2026, the United States Internal Revenue Service formally launched an inquiry into Archewell and its associated commercial arms. Letters were sent not just to the foundation itself, but directly to the royal household, HM Treasury, and the Royal Trust, demanding clarity on three explosive questions. Had any British royal entity ever financially or symbolically endorsed Archewell? Had royal titles or insignia been used in US-based commercial ventures without authorization? And had there been any intentional misrepresentation of royal support in tax filings or fundraising materials? The spark that lit the fuse traced back to remarks attributed to Meghan Markle at the Aspen Impact Forum, where she described Archewell as representing a legacy of service that the Crown instilled in us. U.S. regulators reportedly flagged that language as potentially misleading. What followed was a forensic examination of tax filings, fundraising appeals, and brand promotions, especially the 2024 luxury lifestyle launch, known as Ever. And the deeper investigators looked, the more questions multiplied. Within 48 hours of receiving the heir's correspondence, Sir George Lells of the Royal Trust authorized an emergency digital summit between the heir's International Tax Crimes Unit and senior palace legal officials. The disclosures were immediate and exhaustive. The palace confirmed that no sovereign grant funds, no charitable endowments, and no palace stipends had ever been allocated to Archewell. Internal communications from 2024 were produced, showing prior warnings about unauthorized use of royal-adjacent imagery in his Ever packaging. Legal files demonstrated that no licensing or endorsement rights had ever been granted for commercial use of the Duke or Duchess of Sussex titles. According to reporting referenced in the file, one ears agent described the call as among the most candid cross-border nonprofit audit collaborations they had seen from a historical institution. But that was only the beginning. On February 16, a confidential in-person summit took place at Clarence House between Prince William and senior heirs official Peter Howard. This was not ceremony, it was operational. The six-point agenda included alleged improper use of the Duchess of Sussex title in U.S. tax documents, possible implications of royal endorsement in charitable solicitations, packaging that visually echoed royal emblems, and a review of communications between palace officials and Sussex representatives from 2021 to 2025. At one point, when asked about reputational harm, William reportedly responded that the royal family cannot be reduced to a marketing motif, and that it is a steward of constitutional legacy, not a participant in private monetization narratives. His February 11 address had three unmistakable goals: reassure UK taxpayers and Commonwealth nations that the monarchy had no financial or symbolic link to Archewell, clarify the Crown's institutional position ahead of a US legal phase, and demonstrate proactive cooperation with both HM Treasury and American regulators. From that speech emerged three pillars of palace policy: an institutional firewall prohibiting implication of royal endorsement for commercial gain, ethical neutrality demanding that the monarchy remain non-partisan and non-commercial, and a duty to disavow ventures that exploit royal association. Without approval. These principles were codified in a document titled Statement of Institutional Separation, Archewell and the Crown, and distributed to nonprofit regulators across the US, UK, and Canada. Meanwhile, the ear's audit into Archewell's finances painted a troubling picture. The Foundation's 2024 disclosures showed $2.1 million in donations against $5.1 million in expenses, with only $1.25 million distributed as charitable grants. Salaries for 2 employees reportedly totaled $913,000, while administrative and security costs reached $2.9 million. More than 75% of the budget went to overhead rather than direct philanthropic activities. The As Ever brand faced separate scrutiny. Despite initial press claims of rapid sellouts, forensic review revealed over $23 million in unsold inventory across North American warehouses, including tens of thousands of fruit preserves, candles, marmalade jars, and decorative sachets. During a January 30-31, 2026 promotional period tied to Meghan's birthday, only 26 units were reportedly sold in 24 hours. Regulators concluded that Archewell's June 2025 shift into a fiscal sponsorship model, placing it under another nonprofit's umbrella, appeared time to avoid public scrutiny as donations declined and media pressure intensified. Following William's declaration, the Royal Trust issued cease and desist notices to Evermark Collective Incorporated, the Delaware-registered parent company of As Ever, citing unauthorized use of stylized crowns, Windsor-reminiscent design cues, and phrases implying royal affiliation. Simultaneously, updated documents were filed with international regulators asserting that no endorsement had ever been granted, and that prior palace requests to discontinue certain usages had been ignored or selectively interpreted. Retail partners began suspending distribution agreements. Warehouses reportedly declined further storage amid payment concerns. Charity rating platforms updated profiles to reflect pending federal audit status. Inside palace circles, preparations reportedly began for a Privy Council review of continued use of the Duke and Duchess of Sussex titles, with legal advisors examining whether commercial deployment during an active international audit could cross into deceptive marketing territory. Through it all, William's stance remained unwavering. The crown, he emphasized, must remain above commerce. Titles are not trade assets, they are symbolic duties held in public trust. As February progressed, the firewall strategy hardened into precedent. Joint compliance memoranda between the heirs and HM Treasury clarified that the investigation would proceed solely against Arkwell and associated entities, with the crown formally cleared of entanglement. Legal teams drafted policy frameworks aimed at preventing future symbolic exploitation, reinforcing the doctrine that no former working royal could leverage institutional language or imagery without explicit consent. What began as a tax audit evolved into a global reckoning over the boundary between inherited legitimacy and private enterprise. By stepping forward publicly, documentation in hand, Prince William transformed a brewing reputational crisis into a constitutional moment. The message carried from Marlborough House to Washington: the crown is not for sale, and its authority cannot be repackaged, rebranded, or repurposed for commercial gain. The aftershocks didn't fade, they intensified. As the legal machinery in both London and Washington accelerated, what had once been whispered about in diplomatic corridors turned into formal proceedings, policy drafts, and potential penalties. The firewall Prince William described was no longer rhetorical. It was operational, documented, and expanding by the hour. Within days of the February 16 Clarence House Summit, the Privy Council quietly convened a subcommittee to examine the continued public and commercial use of the Duke and Duchess of Sussex titles. The charge under consideration was not emotional or familial. It was institutional. Had sustained use of those titles in connection with nonprofit fundraising, branded goods, media appearances, and promotional campaigns crossed the threshold from cultural expression into symbolic exploitation? Legal advisors reportedly drew historical parallels to the 1917 Titles Deprivation Act, not to suggest wartime treason, but to reinforce a constitutional principle: noble titles are tethered to duty, not detached branding. While that statute may not be directly invoked, its underlying doctrine that titles must align with national integrity now shapes deliberations behind palace doors. King Charles, maintaining formal distance from public commentary, is understood to have reviewed draft language prepared in the event misuse is substantiated. The potential outcome? A modern precedent, a post-abdication royal-facing suspension or revocation of peerage due to reputational and legal risk posed to the monarchy. A ruling is expected by March 2026. Meanwhile, the heirs' investigation has shifted from inquiry to escalation. Officials confirmed that both Arkwell and its associated commercial entity are under active fraud review. The financial findings that initially raised eyebrows now carry potential statutory weight. The foundation's reported 2024 figures, $2.1 million in donations against $5.1 million in expenses, with only $1.25 million directed toward charitable grants, remain central to the audit. Over 75% of expenditures were reportedly non-mission related, disproportionately aligned with administrative overhead, security, travel, and promotional activities. Salaries totaling $913,000 for 2 employees intensified scrutiny, particularly given questions about executive-level nonprofit experience. IRS documents also flagged Archewell's June 2025 transition into a fiscal sponsorship model as suspiciously timed. That structural shift, which placed Arkwell under the umbrella of another nonprofit, effectively reduced the obligation to file detailed IRS Form 990 disclosures. Investigators described the move as appearing deliberately timed to avoid scrutiny as media questions mounted and donor confidence declined. Donor revenue itself had reportedly fallen from $13 million in 2021 to just over $2.1 million by 2024. Yet overhead rose while grant disbursement shrank below 25% of total expenditures. For regulators, the imbalance suggested not merely inefficiency, but potential governance failure. The commercial arm, as ever, faces parallel collapse. Forensic inventory analysis confirmed over $23 million in unsold stock across North America. Retail partners suspended agreements. Warehouse operators reportedly refused additional storage over payment concerns. During a January promotional push tied to Meghan's birthday, only 26 units sold in a 24-hour window. Legal exposure now spans multiple fronts. Under Title 26 of the U.S. Code, civil fraud penalties could reach 75% of misused charitable funds. Title 18 provisions regarding wire fraud and misrepresentation are reportedly under review. California's nonprofit integrity statutes have re-entered the picture, with the Attorney General's office reopening a dormant 2023 compliance inquiry in light of new evidence. If prosecutors proceed, consequences could include revocation of Archewell's 501c3 status, civil forfeiture of misused funds, public disclosure of internal communications during discovery, and permanent blacklisting by major retail and charitable registries. Inside Buckingham Palace, the institutional response continues to evolve. A revised Royal Communications Code now mandates explicit disclaimers for all external engagements by non-working royals. A digital registry has been created to track unauthorized commercial or online use of monarchical terminology, including references to the Crown, Windsor legacy, and related symbolic language. The Royal Trust is also finalizing a policy framework titled the Civic Clarity Act. Its purpose: regulate title usage, prohibit symbolic replication in commerce, and establish enforceable disavowal protocols. Though catalyzed by the Sussex case, the policy is designed as a future safeguard, ensuring no former royal can leverage inherited symbolism without explicit institutional sanction. International reaction has been swift. Senior officials from Sweden and Denmark reportedly praised the UK's approach to institutional risk management. The IRS issued a public acknowledgement of the royal household's cooperation and documentation transparency. Headlines in major outlets captured the shift in tone. The crown is not for sale. At the core of this crisis lies a broader reckoning, not merely about taxes or titles, but about the boundary between public service and private monetization. Regulators now characterize the entanglement between Arkwell, as ever, and lingering Sussex title usage as a co-mingling of royal symbolism with personal profit. An internal email from a former executive assistant reportedly cooperating with investigators referenced selective transparency and post-royal branding strategies aimed at maintaining donor trust through legacy language. Prince William's words from February 11 continue to resonate through every filing, every review, every policy draft. The crown must remain above commerce. Titles are symbolic duties, not shields for profit. As February closes, 3 fronts remain active: legal, symbolic, institutional. The Privy Council's review may redefine modern peerage boundaries. The IRS audit may establish a cautionary precedent in celebrity philanthropy oversight. And the monarchy's newly codified firewall may permanently alter how royal identity interacts with media and monetization. What began as a quiet tax audit has transformed into a constitutional watermark. A future king stepped forward not with sentiment but with documentation, not with retaliation but with separation. The line has been drawn, and this time it is written into policy, into law, and into precedent, and into precedent, and into precedent.